The stock price is higher. JMP Securities Devin Ryan joins us now. And Devin, of all the things that Schwab was going to announce today, I was watching the stock price the closest because a lot of bad news has already been in this stock. So the fact that it's higher, I guess, is somewhat good news, isn't it?
I think it is good news, Sarah. I mean, this is kind of the push-pull between the near term and long term. Near term, they actually guided revenues down a bit, I think, relative to expectations. And so they're still seeing some headwinds from higher funding costs as deposits go out the door. The flip side is, the long-term story remains very much intact. They had a fantastic net new asset quarter. Client assets were up 7.5%. And so, the core business is doing fine. It's just that push-pull between what's going on with deposits. And they did say that they think we're getting towards the tail end of this deposit movement, and maybe that's part of what's helping the stock this morning.
So what is the risk from here? Isn't everybody worried about earnings, about margins? Even if deposit outflows have stopped, Devin, aren't we seeing a lot of rotation within companies like Schwab into less margin producing assets?
Exactly, Sarah. So that's what, essentially led to the lower guidance. And so what I think is interesting is that they did reduce guidance for the second quarter, yet the stock's up. And so I think to that point, people generally understand this headwind, and, it's not over yet. And it is very expensive when they have to borrow from the FHLB relative to a 50 basis point deposit. But, I do think that, they made the case that we're getting to the tail end of that. And then, the other side is, the core business, is performing fine. And so, after the stock's down 30+%, I think that's where, expectations on the near term are maybe a little bit less relevant, and people are looking at the long-term earnings power of the company.
Right. Well, this is a company whose CEO just on the call right now just said, our franchise strength and financial model remain very much intact. We're winning in the marketplace amongst clients. Anyone suggesting otherwise is mistaken. With those strong words, though, you seem to be indicating that 30% move down was justified to some extent. So what are your expectations for the stock?
So, yeah, we're looking at earnings power. So when the stock traded down to 40+%, it felt like there were some liquidity concerns in the market, and we were pushing back on that. They've got ample liquidity. The only issue is that liquidity can be expensive. And so our view was that earnings were going to come down a fair amount, and that's been happening. And, I think we are getting to now a point where they're guiding lower and the stock is stabilizing. And so we're probably getting into more of a fair risk reward in our opinion. But that was really it. It was more of an earnings headwind than any liquidity fear, and that was overblown.
When it comes to customers and their clients' cash behaviors, is there anything we learned here that we could apply perhaps more broadly?
Yeah, I think that, so a couple things. Transactional cash, which is cash that customers are keeping in their account for paying bills or to buy stocks, that's at a 20-year low. And so, of course, we could break below that with interest rates where they are today. But if you even go back to when interest rates were at similar points, we are kind of at the lows. And so, whether we go a little bit lower, I think is a debate. But the vast majority of pain is behind us. I think that's probably the key point. And they made a number of anecdotes around that on the call. And so I think that's what people are feeling a little bit better about that. And then, for us, that's going to be the catalyst for the stock to really take a step higher when you actually start to see net cash inflecting higher versus the outflow that's been going on over the past few quarters.
What about the pause of the buybacks? Was that anticipated, that the company's citing regulatory uncertainty there?
Yeah, it was anticipated, Sarah. We think that right now this is all about making sure that you have the liquidity and the financial position to get to the other side of this really uncertain environment. And also, we don't know what regulatory change is going to come on the other side of this. And so right now, not all the securities losses are flowing through the regulatory capital. And so I think the view here that's prudent is you probably want to build capital just in case there's regulatory change and get an even stronger position. And I think that's what they're going to do. But, over the long term, they've got a very cash flow generative model and will return capital.
Devin Ryan, thank you very much. Watching Schwab, watching M&T also rebound after earnings today. Appreciate the time.
Yeah, great to see you. Thank you.
From JMP Securities.